What is going on, everyone? Welcome back to another video. So the stock market was crazy last week. We saw a big rally all the way up from Monday all the way up to Friday. With the presidential elections result announced, congratulations to Biden and Harris. Where will the market be going? Don't worry, we'll do a little recap on what happened with the stock market last week and then talk about where the stock market might be going this week and finally conclude with some sectors and stocks you should be watching because with high potential of growth. Let's get started. So if you look at the S&P 500 index SPY, you see here, this is the Monday. It started going up, up, and up. It started gapping up every single day in anticipation of Joe Biden's victory. And this is very interesting here as you see the first candle on the Monday coming into the election before the election actually started. It was a green day, but it was a very indecisive candle, so it went down and up and down and up and kind of the day closed at the same price it opened. So there was a lot more buyers at the same time. There's also seller. It shows that some people are still offloading in anticipation of the risk going into the election, but there are also a lot of people putting more money into the market, really trying to buy that dip in anticipation of the reduced uncertainty and the prices going up again. And that's why you essentially see on the day of the election as well, the market gapped up and then it ended at green. So this overall, that was the trend for the whole week. We went from closing about 328 all the way up to 352. This was about an 8% increase in S&P 500. And this is not very common. This kind of rate of growth in a week for 8%, that's insane. That doesn't really happen. I mean, if you think about the average annual growth of S&P 500 is about 9 to 10%, and seeing an 8% within a week, that's not sustainable. This ramp up is way too fast. And just look at this. We didn't reach that. We didn't reach a higher high compared to the late September, October peak before it started tanking again. So we're running into resistance right now. And basis speed of the ramp up, that we're way overextended. So what I'm anticipating is we'll have a little pullback next week. How much that's going to be, it really depends. See when we'll find the next resistance. So if you look at the Fibonacci retracement, I think the next level of resistance we'll find is around this 345 level. And if it doesn't hold, we'll probably come down to the 340, which kind of makes sense. I think it's going to cool off a little bit. So if you're thinking about buying into the market, I would definitely wait a little longer because I think it's overheated right now. It's going to cool down. I think people will definitely start taking profit when you see these kind of gains in such a short amount of time. Just let the momentum catch up first before you go into the market. So yeah, that's the S&P. I think next week in Monday, Tuesday, we might see a little pullback. We might see 347, 346 level and keep dropping until we really hit that 345. And we're still in this, a new pattern started forming with this bottom right over here, finding new support and resistance. So we're kind of in this symmetrical triangle going forward and we need to break out of this line that's descending to really start going more rallies. But overall, the trend is still very bullish long term. So we're definitely not bearish anymore, but still very short term, we're still looking for a pullback for sure. So that's the SPY. Let's look at TLT, the 20-year treasury yield. And you see it's still kind of not moving, but it's in a small downward channel, showing that the prices of bonds are going down, showing it's usually inversely correlated with the equities market. And if you look further at UUP, the dollar index, dollar strength index. So we were in a down channel for the last, since Corona started, but then it finally broke out of this downward channel, maybe looking for a bullish string. If it's going up, it means the strength in equity market is decreasing. These are also inversely correlated indexes. But then you see it's coming back down into a downward channel. So looking at bearish dollar strength index again. So it's showing strengthening of the equities market in stocks. So this is very bullish indicators that the stock market will start rallying soon. It's gonna run up and is very strong right now. So let's look at gold as well, GLD. And over here, you see we are all more or less, we were trying to break out of here but failed, so we found a lower level back in late September. So we've been consolidating all the way through, and then we finally broke this downward resistance line. I think there might be a little pullback because this is a big jump. I think we're gonna come back around 180, 181, and then start rallying again. So I think this is a good time to start looking at gold and silver, precious metal, just because we are looking at really a lot of inflation, a lot of new money printing. So people are really starting to put their money in precious metals such as gold and silver and equities, stocks, and less so with bonds because of the low interest rate. Your yields are going to be very low, so it's not worth the investment. And then look at silver. It's very similar trend. We were consolidating with this symmetric triangle trying to break out over here, but the trend broke ultimately when we fell. And then same thing, kind of consolidating until finally breaking free those resistance. So now it's similar to gold as well. So we're still looking for a little pullback and then upward trend just because of the inflation and the weakening of the dollar. Let's go back to the S&P again and just look at what happened in last week and why did we see such a huge run up, and what might be happening and what we should expect going forward. So as I was saying before, we were expecting a blue sweep of House, Senate, and presidency. And on Wednesday, when we got better resolution of what happened the day after the election, we saw Biden was indeed leading, but for the Senate, it was actually still predominantly red, Republican leading, and likely to still have a Republican majority. So having the split in the presidency and Senate will likely lead to a gridlock with nothing being passed. What does this mean? This actually brings a lot of stability, knowing there isn't going to be a lot of changes in monetary policies or any policies that may drastically shift the market within the next 2 years until the next election. So on Wednesday, we actually saw a very big rotation from industrial into tech. So if you were to look up, Caterpillar, one of the biggest industrial providing companies, so November 4th, this is a huge drop, about 7% on Wednesday. But then if you look at some of the tech sectors like Facebook, on the same day, they actually saw a huge gap up. This is insane. There's a huge sell-off in industrials, and then people are rotating their money into big tech. And what is going on over there exactly? And there's a couple of theories going on. One of them is the trade war with China. Biden is less likely to be as aggressive about it as he was as with Trump, just because big tech are so reliant on the Chinese market, both for consumers and also for their supply chain, and reducing that burden on them will heavily increase their profit margin. Another big factor is the breakup of the tech companies that Trump started. And going into this, Biden is more favoring tech, and he doesn't believe that they should be broken up right now. He believes more in more regulations and stopping the monopoly that may be taking place. So this is heavily favoring in tech. In addition, Biden also is investing $20 billion in getting broadband access to communities that don't have it already, so especially in rural America, bring technology and access to the internet. This will further increase the tech population and its ability to get new customers and increase their revenue. So this is definitely a big plus. Tech is definitely heavily favored under the Biden administration. So knowing Joe Biden will be the next president of the United States, what stocks and sectors should we look into under his policies? So one big area he's focused on is renewable energy, especially solar energy. So over here, we're looking at Junko Solar, JKS. It's a Chinese solar company, probably one of the biggest providers in the world. And you see this huge ramp up since September from $20 all the way peaking at 90, and then things that kind of jumped down. But then upon, last week, November 5th, it shot up like crazy again. But then it kind of finally pulled back just because of the insane momentum within a 1 day rally. So right now we're still trading around $65. I think this is a good opportunity if it pulls back a little more. there's a lot of support over here. So within the next few years, I think you'll see definitely a big increase in solar. Another one is SunPower, another solar company, as you see, big increases from all the way $4 in July all the way up to almost all-time highs at above 20 right now. So keep an eye out on these solar stocks. It might pull back a little bit if they start consolidating, finding solid support. That'd be a good position to enter as well. Another area is actually cannabis stocks. Under the Biden administration, they want to decriminalize and legalize um, cannabis in general. So if you look at Tilray, a Canadian company, so they've been heavily beaten down just due to coronavirus and decrease in customer demand for it. But then, as you see in the last couple of days, they started spiking up again because the presidential election results. And this is a great time to really get in, just because even if Biden isn't able to pass, federal legalization of cannabis, a lot of states are starting to decriminalize it, such as New Jersey, and I anticipate within the next decade, more and more states will heavily favor in the decriminalization and legalization of it, increasing the customer demand for it and the market available. So this is going to be a huge market, and it's already growing a lot. I think there's so much upside to this that can, grow even higher. Another one is Canopy, CGC, also another Canadian company. Kind of the profile looks very similar to Tilray, but these are two solid companies that I personally already added positions to for the long term. They're currently trading at 23. Definitely a little overextended right now. It might pull back a little bit, back down to 22. But then, I started adding a position already around here. Here you have it, guys. Thank you all for sticking it to the end. For those who made it, if you guys found this video helpful, please like and subscribe and support the channel. And if you guys have any other questions or any ideas for future videos that I would be helped to help make, please comment down below. Thanks. Have a nice day. Here you have it, guys. Thank you all for sticking it to the end. For those who made it, if you guys found this video helpful, please like and subscribe and support the channel. And if you guys have any other questions or any ideas for future videos that I would be helped to help make, please comment down below. Thanks. Have a nice day.